Hello again. As you know, I have started publishing these market outlooks on a weekly basis. I usually do it on Tuesdays because many of you know I'm a CNBC contributor, and those guys keep me busy on Mondays. So I do these market outlooks on Tuesdays based on the text-based market outlook I publish on our Discord server. So this is just a video version of that. So the reason I'm doing the market outlook today on Monday is because tomorrow morning we have a very important piece of data coming out, which is CPI. And I don't know if you listen to these Fed presidents when they come out talk on media. If you listen carefully, it's very hard to gauge what they're saying. They're very crafty about what they say because they don't want the markets to connect the dots and figure out something which they're not trying to say, which is understandable. But if you listen to the last few Fed presidents who came out, including Powell, to me it appears like they want to cut rates, okay, and they're ready for June. Usually, like if you, I remember this interview came out with Jay Powell recently, and the interviewer asked him that can politics or Congress pressurize the Fed to make a decision? And he was very, again, very crafty about his reply, but he said they are independent agency, and they always maintain that they're independent agency, and uh, they are not affected by politics. They make their own decisions. That was one thing, okay. And the other thing is Powell has been saying for months that they will be data dependent when deciding if they want to cut rates, right? But most of the Fed presidents kind of ignored the really high CPI that came out in January as a data anomaly, and most of them reiterated the fact that January data could be an anomaly. Let's see what February brings, all that stuff. So to me, it appears like when they are saying they're data dependent when deciding to cut rates, but they are actually ready to cut the rates. But the only thing that is stopping them is these data points like CPI, PPI, PC, all that stuff. So it's the opposite. Instead of letting the data decide um, when they should cut rates, they are ready to cut rates, but now the data is the one that will force them to hold back. You see the difference what I'm trying to say? That's what I've gleaned from all the interviews that I've seen recently. Also, one interesting fact is that whenever Fed goes through a rate hike cycle, they never cut. They at least in the history, they have never cut rates out of the goodness of their heart. They only cut rates when they break something. So, and when they break something, it's economy going into a recession. That hasn't happened yet. So the economy is actually roaring like crazy. Stock markets are going up like no tomorrow, and retail sales are going up. Everything is up. If you look at the charts, Nvidia, you look at Bitcoin, you look at SOXX semiconductors, everything is up. They haven't been able to slow down the economy. Yet they're saying that they're considering rate cuts in June. So you see what I mean, how I'm trying to connect these dots. That usually the Fed will cut rates when they break something, and it's a recession mostly. In this case, forget about recession. The economy is roaring. They haven't even slowed down the economy, and they're saying that they want to cut rates. But let's switch to the market outlook for this week. So tomorrow morning, very important data coming out, CPI. And the expectation is the CPI will be slightly hotter than expected because energy prices have rebounded. CPI inflation has been kept low because energy prices have been like very low in the past many months. but energy prices have rebound, and so inflation is expected to go up. So what I expect, I think what's going to happen tomorrow morning is, if CPI is higher, markets have already started showing signs of cracking. And if you see my video from the last week, where I pointed out that many of the not fantastic four, the magnificent seven stocks are pulling back. So we are not in a secular uptrend anymore. Apple, Tesla, I think Google, they're all pulling back. Now, the main guy holding the fort was Nvidia. And what we saw on Friday was a massive reversal candle, and it was a bearish engulfing candle. And if you look on YouTube, social media, wherever, everybody's talking about that. That was a massive reversal candle on Nvidia, on SMCI, on SOXX, which is a semiconductor ETF. So the pullbacks that we were beginning to, the cracks that we were beginning to see in certain stocks, is that's now actually spreading across the board. So we are at that critical point. If the CPI comes out hotter than expected, this rally is done, and we should get a very sizable correction. And I've mentioned this in the last week's video too, that the markets are just hanging on the edge, and there's a correction coming. We just need a trigger, and then the CPI could be a trigger. Of course, having said that, I will also remind you, this has happened many times to me in the last few months. So I keep getting trapped, like I keep getting bear trapped, because when I clearly see signs of markets beginning to reverse, some event happens, comes out with some kind of surprise, and markets reverse course. So it's better to be prepared that this can happen tomorrow morning as well. So if CPI somehow, for some miraculous reason, I don't see any reason that CPI should come out tame. It should be harder because of energy prices. If CPI is tame tomorrow and shows signs of slowing inflation, then expect markets to reverse right from here and start going up again. So that's my projection of SPY, that if CPI is hotter than expected, which everybody is expecting, then this uptrend is broken. Officially, it will be broken and will start dropping. And then once you start dropping, then I'll make another video for you guys, because here I'm using Fibonacci extensions to project how high the markets will go. But once the markets start reversing, then I'll start making videos on how much markets can fall before we can expect to see a bounce. And I'll use moving averages, I'll use Fibonacci retracements and all of that, RSI, to make those projections. So wait for that. We haven't seen any kind of correction yet. I'm hoping that we'll get one starting tomorrow. But when that does happen, then I'll put out more videos for you.